Oh man, we just had some shocking data come in, which could change the way that Jerome Powell plans his interest rate hikes. Yes, we've just had the ADP jobs figure surprise to the downside, and we've got Jerome Powell speaking shortly. Will he come out and address the market in a dovish manner? And can we see a rally? We've got Bitcoin up 2.5% today and enjoying a nice breakout. We monitored this pattern yesterday. I'm feeling under the weather today, but I'm going to bring you the update in the chart, so smash up the likes, make sure you're subscribed, and I'm gonna stop shouting because it's not doing my voice any favors. Now, as you can see here, guys, here on the hourly chart, we got this nice breakout on Bitcoin. We got this really lovely breakout, in fact, on Bitcoin, and now you've seen some continued strength in the market, partly helped by the ADP jobs figure. Now, remember, on Friday, we get our non-farm payrolls. Your non-farm payrolls are the official ones that really Jerome Powell uses, but your ADP figure gives you a precursor to that. It's the private jobs figure. Okay, so this gives you a clue ahead of Jerome Powell speaking later today in a few hours about will he come out dovish and will he soften his tone. Now, the expected reading for this ADP jobs figure was 200,000 new jobs created in the previous month. Now, this is what it came out as, 127,000. This is a huge decrease in the number of jobs. And this is good news, remember. You want the labor market to soften. Jerome Powell has continued to say that the labor market is way too tight. And that's one of the reasons he's got plenty of runway to continue his interest rate hikes. So you can see here, the previous reading was 239. We expected this November figure to come in at 200,000, but it's coming at 127,000 if you look at it. Some major declines. I mean, if you take a look at the chief economist, turning points can be hard to capture in the labor market, but our data suggests that the Federal Reserve tightening is having an impact on job creation and pay gains. In addition, companies are no longer in hyper replacement mode. They're not just suddenly replacing people. If people are leaving, they're just not opening up a new job. Okay, because they're just doing more with less people, which is what happens in a rate hike cycle. Fewer people are quitting, and the post-pandemic recovery is stabilizing. So think about it. If there's less jobs available in the market, you're not going to quit, right? Because you have less opportunity to go find another job elsewhere. When there's 239,000 new jobs being created every single month, that has just halved. Right? It's just half to 127,000. And some economists are saying that throughout 2023, these monthly readings could be as low as 30,000 only new jobs created. So this is showing that what Jerome Powell is doing is working. So on the CPI front, we've seen it's working. Inflation is coming down, albeit not enough to 2%. We've also seen on the job side, things are coming down. So the question now is going to be, will Jerome Powell come out later on today and kind of pander to the markets? Or is he going to come out and put his foot around the necks of the market? Now, my view is he'll probably be balanced in the middle. I think he will show us that we're making progress. I think he will point to this data. He will point to CPI, but he's going to continue to remind us that he's got to come down to 2%. And I think he's going to remind markets that he's got to keep going. Remember, if we take a look here at the Fed rate monitor tool and give this a quick refresh, we will see that the markets are still expecting a pivot, although that percentage has started to reduce. This was as high as about 80% of the market expecting 50 basis points. Now you're starting to see less of the market expect that. Part of this is to do with the various things going on in terms of China and different COVID variants here in the winter. And also part of that is just due to the tensions around Russia, Ukraine as well. So people are worried that supply chains can start to clog up again, putting us back in this virtual cycle of inflation, which is the last thing we want. You can see US markets here today, Dow Jones down 1%. You can see S&P down, call it flat, 0.31, and the NASDAQ flat as well. Now, if we come on to Bitcoin more specifically, you are seeing a nice move. And if I zoom out here onto the 4 hourly, you'll remember that I was sharing this triangle pattern with you guys yesterday, and you have indeed got the breakout to the upside. But do expect some resistance from where we're at, that's these pivot points here, and then some more resistance from 17,600. But this is good. If we can work our way to 17,600, we can test that level, because we haven't. Since we fell, we've not tested that level since the FTX nightmare. We need to find out, will it turn into resistance? Because that's the June low there. Will it turn into resistance, or will it ultimately act as support and we can get back above it and back into our channel? That's going to be a critical level, so watch out carefully, because if we get rejected from there, the rebound effect back down could take us well below the low we just created at 15,500. So that's what I'm watching for here on the market. A few other things to point out which kind of give you a little bit of a somewhat gloomy picture, right? If I just pop me out the way for a sec. You can see here the blue line is your Bitcoin hash rate. So hash rate continuing to fall here in the late periods of November. You can also see that the pink, the purpley pink color, is the miner balance. And the miner balance is coming down. We spoke about this yesterday. Miners are having to sell. They're going into their reserves and they're selling more than they're making from the block rewards. Okay, so the net sellers right now. And that's because they've got to cover their expenses. And if Bitcoin continues to fall, you've got to sell more Bitcoin to cover the same amount of expenses. And in fact, your expenses as a miner are probably going up because you've got inflationary woes as well. So it's a tricky position for miners. And this is coming into that final miner capitulation, which a lot of people have been referring to. We can also take a look here at this chart, which shows you that non-whales, non-BTC whales, these are not the people with 10,000 or more, are just showing a new record of accumulation. So we shared this in a few videos ago as well. Non-whales are accumulating, and generally across the board people are accumulating, but obviously the whales are accumulating less so than the other cohorts. So we are seeing an overall accumulation mindset right now. People definitely are buying the dip. I mean, you can see here, fear and greed index is at 29. Yesterday it was at 26. Just last week it was at 22. So the market is starting to come to terms with this FTX saga. It didn't actually, the fear and greed index, if you take that as an indication, it didn't collapse to 8 or 7 or some of these numbers we've seen despite the FTX issue. So the market really has done a decent job of taking it in its stride. But what could be the risk factor from now is if either one, Jerome Powell comes out and continues to be aggressive. Does he come out, put his foot around the necks of the markets and say, "Oi, you guys stop rallying, you chill out. Right? I've got more work to do. I'm going to keep doing 75 basis points and I'm not stopping. I'm not going to just try to get inflation down to 4%. I'm going to get it all the way down to 2%. And I'm going to do it in this cycle now without any pauses. Right? That's the kind of tone that will scare the markets. If he comes out and says we're making really good progress, there could be a slowdown soon, when the labor market is definitely showing signs of softening, we're making good progress on the CPI front, then markets can take that as a positive and decide to rally from there. So loads going on in the market. You've also had this interesting news, which is that Brazil passes law to legalize crypto as a payment method. The law was approved by the Chamber of Deputies of Brazil, but still requires the approval of executive branch to be enacted. And again, this is the kind of news that if we were in the midst of a bull cycle, or even close to a bull cycle, this would tear markets up. If you've been around in a previous bull market, whether you saw the El Salvador, whether you saw Tesla accepting Bitcoin, these things really create huge pumps in the price. I mean, we were talking 10, 15, 20% days in Bitcoin, let alone altcoins. But obviously, in this tough market, these kinds of fundamental adoptions are not going to drive the price, because right now the market's in overall fear due to the interest rate tightening and the environment we're in. We're in a constrictive environment right now. We're not in an accommodative environment. Jerome Powell is firmly tightening and all the global central banks right now are tightening. So until that rotates, we're going to continue to feel some pain here in the markets. But it is good to see that Bitcoin is at least attempting its way up to 17,600. It's going to be an important level. Can we get it? Are we going to get rejected and thrown violently back down to the downside? Another precursor for us around that, to give us a clue, is to monitor this dollar index. And I'm just going to flip it across to the daily chart so you can see what I'm talking about here. Now, bring in the EMA ribbon. And remember I said we could be seeing a positive week for dollar index. And we've had exactly that. 1, 2, 3, 4. So I said we're going to get the bounce off the 200 EMA. You've had 4 positive days, and you can even see where my arrow is drawn, guys. I've not changed it. I said we could be seeing a positive day. But here's what's interesting. And this is really interesting. Why is it that the dollar index is showing green for 4 days in a row, and yet Bitcoin in those 4 days has shown 2 out of the 4 as green days? Normally they are inversely correlated. So any day or hourly candle that dollar index is falling, Bitcoin would normally rise, and vice versa. If dollar index is rising up towards the EMA ribbon, then Bitcoin would be falling. We're not seeing that. So we're seeing a decouple here. And this is not completely out of the realms of what we would expect. And you've got to understand why. And that is because when the dollar index was moving in the other direction, when it was falling, when we broke our daily EMA ribbon to the downside, and equities were rallying, remember? We couldn't take advantage of it. Why? Because of Sam Bankman-Fried, because of the FTX saga. So crypto's got a little bit of catching up to do with the state of the macro markets. So once it's got over its crypto-related issues in terms of FTX, the FUD, any other insolvencies, there is a little bit of a gap that Bitcoin needs to catch up to join the rally that the equity markets did have. So there you have it, guys. Hope you enjoyed this video. Jerome Powell speaking in a few hours. Be sure to follow my Twitter and be in our Discord. I'll post some updates in there. Thanks for watching. Go watch this video here, and I'll see you in the next one.